Check out the new W-4 tax withholding form. Really? If you are starting a new job or if you want to adjust the amount of income tax withheld from your paycheck, the form that you'll have to complete and give to your employer will look much different. Form W-4, which instructs employers how much tax to withhold, got a makeover for 2020 from the IRS. The redesign reflects changes to the federal tax code from the Tax Cuts and Jobs Act, which took effect last year. The update, the IRS said, reduces the form's complexity and increases the transparency and accuracy of the withholding system. The design may at first appear daunting, said Pete Isberg, Vice President of Government Affairs with Payroll Processor ADP, but overall it's a lot more straightforward. Still, it's a tax form. The American Payroll Association, an industry group, has warned employers that explaining the new form to workers may be challenging and has provided a sample letter to help guide employees. Accurate paycheck withholding is important because if too little money is deducted, you may face an unwelcome bill, and possibly a penalty, at tax time. Ideally, tax experts say, the amount withheld should roughly match the amount of tax owed. If too much money is deducted, you may get a fat tax refund. Some people prefer large refunds as a sort of forced savings, said Alice Jacobson, Senior Manager of Government Relations with the Payroll Association. But a big refund means you gave the government a no-interest loan. While the W-4 form had been tweaked over the years, the last major redesign occurred in 1987, in response to the Tax Reform Act of 1986. The old form was deemed too complex, so it was changed to cut down on worksheets and other instructions, said an IRS spokesman, Eric Smith, in an email. Perhaps the most obvious change is the banishment of allowances, which were used to calculate withholding on the previous W-4 form. The more allowances claimed, the less money the employer deducted for taxes. But allowances were based on personal exemptions, an amount of money you could deduct for yourself and for each of your dependents, and those are unavailable to taxpayers under the new tax law. Instead, the new form takes workers through 5 steps that aim to account for all sources of income, including second jobs, a spouse's job, self-employment income, and even income from things like dividends and interest, to determine the correct withholding amount. Employees also enter information about dependents and tax deductions to fine-tune withholdings. It's like a mini income tax return, said Andy Phillips, director of H&R Block's Tax Institute. Some workers may be leery about alerting employers to second jobs or sharing details about investment income, said Kelly Long, a consumer financial education advocate with the American Institute of Certified Public ACU. For more on this story, visit the news article link.